It seems like a pivotal moment. Is it a good time to maybe get into emerging markets with all of this change?
It's too early, I think. I do expect the US dollar to continue rising probably into late this year or early next year, because the monetary policy divergence between the US and the rest of the world will continue. And the market has assumed that Europe will eventually normalize, and that is going to be pushed out further and further. Japan is pushing it out further, and China is a different story. But I do believe that the dollar will remain strong, and a strong dollar soaks up liquidity in the global credit markets. And interest rates in the US dollar are also rising. This is a combination that is very bad for emerging markets. They are leveraged to the Chinese economy, which is slowing down, and they are leveraged to the global liquidity and the dollar, which is all moving in the wrong direction. So I think the upside for emerging markets is very minimal, and there is more downside to come.
What does that mean then? Do you stick with the safety of the US, which right now doesn't seem all that safe either?
Yeah, by default, the US is doing much better. It's the best. It has the strongest currency. It has the strongest economy. But it has a very split market. And I think the leaders in the market, the FANG stocks, the technology stocks, they are very extended. And I think later this summer we will get a decline of maybe 10%, which is a correction. And then we rally up again into early next year. So I think this is a trading market. The laggards, like those that have been hit by rising interest rates, like consumer staples, utilities, they can bounce a little bit. But I would stay away from the cyclical sectors. They are not performing very well here.
Felix, just coming back to your earlier comment on China, you say the rest of the world is slowing down, and that's driven in part by a slowing China. What sort of slowdown are we talking about here? Clearly, the economy data showed that last week is losing some momentum. How much of momentum is it losing, and how problematic is that?
Well, China is usually publishing numbers around 6 to 7% growth. They will probably continue to publish low six-ish type of numbers. But in reality, I think China will slow down into early next year to 4% or so, which is a considerable slowdown when you look at the dependency of other economies on the Chinese economy. So they are losing virtually 1/3 of their growth.
You sort of wonder, I mean, did the authorities allow the Chinese economy to slow that much?
I have very high respect for the Chinese government. Actually, I think it's the best government in the world. It's the only government that has a long-term strategic view and a plan. However, 2021 is the 100th anniversary of the Communist Party, and in 22 there is the next National Congress for the Communist Party, where they confirm the leadership. So those are important points, and they want to have a strong economy then. That means they are addressing the restructuring, the excesses, and do the restructuring in the period of 18-19 to stimulate again in 20. And that's why I think it's very normal that you have a slowdown here in 18 and 19 in China.